The section on profit and losses is incredibly important. It's great that you begin the course with it, but it looks to me that it is much more complex than the presentation on the video appears to be. That's absolutely right. And I'll stop here and make a comment. Money management, risk, profit and losses is something that you've got to take in stages, I believe. And we have to also remember that the kit is designed for the average trader. And like I said in the introduction, there's no way that I could really customize a kit for everyone because everyone has a different level of experience and a different level of expectation. So there were a number of assumptions that I built into the kit. There were a number of very basic or very advanced concepts which I distilled down to their essence and put into the kit. So just know that absolutely money management is far more complex than what I presented in the kit. But what I did in the kit was distill down much of that complexity in a way I felt most people would be able to understand. And then Alex goes on and he gives an example of a scenario. Here's the problem with most scenario-based questions you're going to ask. Most scenario-based questions, what I mean by this is what most traders will do is they'll look at one example. Like they'll take the trading over here. And they'll say, well, okay, but based on what happened in the market right here, if you would have done this and you would have had a stop right here and your profit target would have been over here, you wouldn't have gotten in. And the problem with scenario-based questions, or even looking at general questions, like Alex goes on, he says, in the example, you estimate the profits at $40 in case when half of the trades are wins. In both cases, when you're looking at a single scenario here, or you're looking at the general example I give in the course, what you have to realize is both of them are just that. They're general examples. The examples that I give in the course, we're trying to get a concept across of if you are sticking to your system, just like the expectations video that I did yesterday, when you stick to the system and your numbers work, it lets you, it gives you more cushion to make an error. Okay, that is something you've got to take away from all of these money management scenarios, is that number one, you have to stick with the system, and number two, if your system is robust enough, in other words, to go back to the expectancy video where I was talking about, remember, percentage wins times the dollar win minus the percentage loss minus the dollar of the average loss. If this number is high, like what we were looking at, let's say it's between 20 and 40. If this number is between 20 and 40, that gives you room for error. Okay, and that's why I was playing with the numbers. So let's say what you're saying is that your basic system, what you're expecting to make is 60% winners, where you're going to make on average 75 pips on your wins, 40% losers, where you're going to lose, times 33, I think is what I put in there. If this is what you think is going to happen, you can also then start playing with the numbers to see what happens if these numbers are not correct. That was the point of the exercise, because it gives you a range of expectancy for your trading system.